Hey fellas, in this video, I'm going to be giving you a very simple, high probability, one-to-one risk reward trading strategy. Why one-to-one? Just to start there right off the rip, like why is this better than, say 3-to-1 risk reward? Or why is this better than 2-to-1 risk reward, right? Risking one to make one. Why is that better? Like, why do you always see me so much preaching that one-to-one is the best for most, keyword, most traders? One-to-one, the biggest reason is it's better for your psychology, because what comes with bigger risk rewards like 3-to-1, or some people say 1-to-3, you risk one to make three, or 4-to-1, 5-to-1, whatever, right? What comes with that is more losses. I saw somebody on X the other day say, oh, I just do 3-to-1, I get a 70% win rate. Good luck with that, buddy. Good luck with that. Unless you're a guru that's peddling lies and BS, it's not going to happen. That like you're not going to get a high win rate with big risk reward. And anybody who sells that is full of garbage. I promise you 100% that's the truth. Okay. The whole point of big risk reward is you can afford to take more losses. But what happens when you do that, whether you want to admit it or not, it's a lot more difficult to psychologically handle that. With one-to-one, your drawdowns are not going to be as drawn out. You're not going to have as many losing streaks. And having that consistency, right? Being able to dig out of that drawdown quicker, losing streaks, all that stuff, like it does a lot for your psychology. Nobody talks about that. Like it's one of the biggest things when it comes to psychology is one-to-one risk reward. And nobody ever talks about it. It's such a big thing, right? And also to come with receipts. So, I'm not just yapping. This is with one-to-one risk reward, folks. Now, there's somebody to point out that these P&Ls look a little bit different. That's because I have rules. Like I won't hold, for example, I won't hold in the high impact news, or I'll have to cut off trades like at New York close. I don't hold overnight with my scalps. So, and adapt from with CC. Like there's those little things, but this is with one-to-one. Don't let anybody tell you that you can't make money with one-to-one. I've tried, 3-to-1 risk reward, high risk reward. One-to-one is easier. It's so much easier. Trading's not easy, but I'm saying it's easier than big risk reward. Also, this individual, one of my mentees, guess what he trades too? Just read that. Just read that. Take a moment to read that. That's from one-to-one too. The proof is in the pudding. Like, what more do you need? What more do you need, right? What I'm teaching you in this video is very similar to what this individual does. Trading for a living, full-time, off a one-to-one risk reward. Very simple strategy that I'm going to teach you here. Okay. And that does remind me, if you do want to be a part of the mentorship, that'll be opening in January. Okay. I will leave a link to that in the video description if you do want to be a part of it. As always, 100 max people is in there. So, and I'll leave a link in the comments below as well. If you want access to the daily video lessons, the live streams, the one-on-one help, all that good stuff, right? So I just got to do that to show you guys that, sure to give you motivation, but to show you that this stuff does work. So don't let anybody tell you that you can't do one-to-one or it's impossible or whatever, right? So enough of that. How about we get right into the details, right? With the strategy, how I approach these setups. So we're going to go over this setup right here first. Okay. You see what I got right here? Timestamped AUD/USD, one-to-one AUD/USD, bullish shift. Okay. So what I'm going to teach you here is this is how you're going to get your highest probability shifts. This is how you're going to get your best deals. And I'm going to give you a couple different variations, ways to approach this, because there isn't one way to do it. I'm going to give you a couple different ways you can do this. This works in Forex. This works in futures. This works in crypto. It doesn't matter, folks. Okay. Doesn't matter what you trade. You can use this, what I'm teaching you here, in all these markets. So with the highest probability shifts that you can get, you need to utilize a higher time frame candle. And you need to observe how price responds off of key levels. So what I mean by that, you notice how AUD/USD is coming off. It's already taken out previous day's lows, Thursday's lows. And you also notice how we're coming off of all this sell side in here. Because when it comes to high probability shifts, you need to have a significant liquidity run, number one. We get that right there. That previous day's lows. And then what happens right here is key. So you see how this candle, this opens at 5 and it closes at 9. It's a 4-hour candle. So what this allows you to do is it gives you a very specific time to go in and hunt. You see how this candle grab that liquidity. You see that right there? And you see how that fails to displace. What you're going to do then is after that candle does that and it closes, you're going to note that candle high right there, the high of that forward candle. So I want you to think of it like this. Liquidity is fuel for price. Liquidity is fuel for price. So it has all this liquidity on the daily, it has previous day's lows taken, has all this liquidity taken. And so the close tells you everything. So it has told you that it's collected that liquidity and it has failed to displace through that liquidity and it pushes up. It's also for the best results. When you see that thing close like this, look at my cursor. You do not want to see it take out the previous candle high for the best results. So you see how you got the other before candle high right there because there's liquidity above that candle too. You see how they didn't take out that? You see how that candle right there did not take out that candle high? So what you are ensuring is the very, 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 very next draw. The very next draw is going to be the high of that candle right there. That's going to be the very next draw on liquidity. So we have all this down here taken, right? So we have all that sell side taken. Okay. And you see how that fails to display. So this is your next draw, the forward candle high. Here's what you're going to do next is whenever that happens, that's where you're going to go in. And then that's where you can hunt for your market structure shift deal. So here's what I like to see personally with my market structure shift deals. If I'm playing a 15-minute shift, I don't like to see 1 hour boss of liquidity taken. What is that? That's a swing high. So for example, if I have a 15-minute bullish shift, like a displacement, I do not want to see a swing high taken. You see I got a swing high right here? That wasn't taken. There's no swing high there on the 1 hour. So stay with me here, okay? Because I'm going to bring it all together. If you're new, I know this might be a lot of information at once. Just stick with it. Stay with me here, and I'm going to break it down to you. I'm going to give you a few different examples. But we have liquidity taken. That's number one. Remember, we have that liquidity taken. All that liquidity, all that sell side's been taken, okay? We don't have any 1 hour buy side taken, which is essential for my 15-minute bullish shift. I don't want to see a 1 hour swing high taken. And then you're going to go in there. Oh, and something else as well I want to include into this is the bonus. Whenever you see something like this, so there's a few things happening here. Now, this is actually a really big thing. Like this thing is just so good. I've seen this was like all the best shifts. This is another observation that I made, right? You know, when you have like a big engulfing candle like this, it's taking out the low. See how like it took out that candle low right there? And you see how it also closed above that high right there. We've already came to the conclusion we got the 4 hour that failed to displace going into 9. If you get this specific signature right there, where it takes out that low and it also takes out the high and it gets a strong close like that. So basically it engulfs that entire thing. Go inside there on your 15-minute. Whenever you see this happen and then on your lower time frame you see a shift, it becomes so much higher probability. Now, really think about what I just told you there, because I just gave you something that is just so powerful. That's gold on a platter. Play that back. Don't overlook what I just told you there, because that's going to be a light bulb moment for you. The 4 hour failed to displace. The 4 hour failed to displace. The 1 hour has like this engulfing candle. It takes out the low liquidity and then it closes strong, which is like it's displaying that conviction, displaying that strength. It shows you that it's very volatile in here, that there's a lot of activity towards it right here. That elephant jumps in the pool. You know, if you've traded ICT, you know what I'm talking about. Or if you listen to ICT, you know what I'm talking about. So we get that right there. That's where you go in. Look. Now, I'm not saying you need like that engulfing candle to get it set up. I'm saying it's a bonus. Fair value gap. But what I do need on the 15-minute is I need the fair value gap and I need the strong close with a short-term high fair value gap. See that right there? And I got that short-term high right there, strong close above that. You see that? That's a confirmed 15-minute shift. What you're going to do next is you're going to wait for a pullback into a discount. Draw out your range. Now I had to let news and everything get done with. So actually I got a little bit of a deeper push lower on this particular day. But here's how you're going to do it. Because I figured, you know, like news is like at after 9:45. So I got in like right around down here. But look, here's how you're going to do it. Enter a discount. Risk that, you know, their target's going to be the high of that 15-minute shift. Risk the low 1-to-1. That's it. That's how you're going to do it, folks. So again, like my stop on this particular day was actually a little bit beneath that low. It was a little bit beneath that low because we had high impact news. I had to let that get done with. So by the time that was done with, I actually got a little bit of a deeper discount. But normally what you're going to do, like if you don't have high impact news or anything, just put your stop beneath that low, impulse move low, and target the high up above. And I'm telling you, when you have this criteria, folks, people act like having over a 50% win rate is just impossible, right? They act like having like a 60% win rate is just insane. It's not. It's not. I watched a really good video recently, not to get too off topic, but this is a very important thing that I want to bring across to you as well. That's going to help you with your psychology here. This individual made a really good point. Like you said, you take, any random strategy, right? You take anything random, you go into the market. I'm not talking about an edge. I'm talking about just take something random. You go into the market like it's going to be 50-50, right? It's going to be 50-50. It's going to be, because it's a coin flip. Remember, you're going in there, it's a coin flip. But all you need to make money with 1-to-1, all you need is just one little thing, one little edge to bump it up, and you're making money with 1-to-1. You just need one little thing. Because remember, you go in randomly, it's just going to be a coin flip. But you just need that one little thing in there that I'm giving you right here that's going to put you above 50%, and now you're making money. See what I mean? See where I'm getting at? I'm giving you that edge to push you above that 50%. So, and that edge is that failure to displace. Utilizing a higher time frame candle. See how that took out that low, failed to displace? So what that does in the 9 is it gives you direction. It's telling you that the very next draw to be the high of that forward candle. I'm not talking about the weekly or what it's going to do in the upcoming week. I'm not talking about what it's going to do in the upcoming month. I'm not talking about any of that. You don't need any of that. This is a scalp deal that I'm talking about. All I'm worried about is what the next forward candle wants to do. And that's what it does. It's telling you it wants to take out that high. Okay. There's no 1 hour buy side liquidity taken in there either. As you can see, there's no 1 hour buy side taken. And I get a 15-minute shift. Fair value gap. Strong close above that high. That's a 15-minute shift. Okay. Enter a discount, risk low, target high. That's simple. So let's go over a couple other things. I'm going to go over a futures example too. And this might be a little bit of a longer video, but I'm literally giving you more information in this video, better stuff in this info than most people give in entire courses. That I'm talking about entire courses that people charge thousands upon thousands for. I'm giving you better stuff in this video that could literally make you profitable. So we're going to go over a few different examples to really drive the point across. But if it doesn't make sense, even after this, watch this video a couple of times, folks. Go into your charts, follow along in the free Discord, which is very important too. There's a link to the free Discord in the video description because I plug all this stuff real time, so you can actually see on the photo real time, and I'll talk about it real time with you in the free Discord with Forex. With futures, I just keep the future stuff in the mentorship chat, but with Forex, I have that plugged in the free Discord. Okay, so you can actually see this stuff unfold real time. And this is another one that I plugged. See this right here? There ain't no hindsight there. Look, USD CAD 5-minute bullish market structure shift. Look for it to run that high 1-to-1. See, there ain't no hindsight there. That's real time that I'm talking about. So it was actually like right before 5, but I was just, I could see the close about to happen in the 5 o'clock on this. So here's the thing, same process. The last thing that this did was, look, this thing came down right here and it took out that low, it took out that low. Now this question right now is popping up in somebody's head, so I'm going to address it. Because you're thinking back to the previous example and you're thinking, well, hold up, I just thought you said a second ago. You don't want to see it take out the previous high. It cleaned up both sides. So what's the difference with this one? The difference is the very last thing that it did was it took out this low. My point with that previous example was you don't want to see it take out the low, fail to displace, and then take out a previous high and fail to displace. What this did was this came up first, this 4-hour candle, it came up first, it took out these highs, and then it came down. The last thing that it did prior to closing this candle into 5 is it took out that low, it took out that low, and it failed to displace. That was the last thing it did. The last thing this candle did before closing was collecting this liquidity. So it collects this liquidity and it fails to displace into 5. What that does is that gives you direction. It gives you a 4-hour bias. That's a 4-hour bias. So what you can do next is after you see this occur, it takes that liquidity in there. What do you think you can do then? You can go down to your lower time frame, and then you can hunt on your lower time frame for that shift. So now you might be looking at it like, oh, we don't got no 15-minute shift though. There's no 15-minute. I'll play this on the 5-minute. See? Because I can do it on the 5-minute too. Like if I have, like in this case, you see, like you don't have no 1 hour, you don't have no 15-minute. what happens is it takes out that sell side, it fails to displace, and then what that does is it sets up that 5 minute in there. See, I got the fair value gap in there. I got the strong close, well, these short-term highs in here. See right there. And then that sets up your 5 minute deal. So because the 4 hour failed to displace, where's the high of the previous 4 hour candle? Right up there. That gives you a target to shoot for. Because the trend's bullish, you got the trend backing you. So in this scenario, you would just put the 1-to-1 on it again. Target that high, put a 1-to-1 on it, so it'll be a little bit beneath that low, and then let it do its thing. Now, if you notice, though, actually, if you were patient, you could have played the 15 minute later, because you see it did end up giving the strong close with that high right there. That actually ended up being a 15 minute bullish shift later on, too. See what I mean? And then see, look, you notice that? It comes down below 50%. So you notice how it did give you that signature a little bit later if you were patient for it, but I played that in 5 minutes and handles it. I'm going to go over futures next, but here I want to make this clear because, you know, I know whenever I do that, whenever I do something like with 15 minute and then I pivot to the 5 minute, I lose some people. So like, okay, now I'm confused. Which one do I do? Let me make this simple for you because I do several different things. When it comes to market structure shift deals, I have a variation of things that I do. Right? It's not just one little thing. Like I have like with CC, it's a variation because not every single place is the same. But I always encourage a beginner to do baby steps. All right, to stick with one thing and then to build from that. So if you want to play the 4 hour failure to displace, you'll get a lot of 15 minute deals. Just like I showed you there and just like I showed you. I mean, that's literally 2 right there that I just showed you right there, folks. That was 2 deals with the 15 minute. And you'll see that a lot with these 4 hour candle closures. So here's my advice. Go in there, look for your 4 hour candle closures. That's going to be your higher time frame candle that you're going to use. Okay? And then you can go in there and then you can offer your 15 minute shift. Okay, remember what also don't you want to see taken? If you're playing the 15 minute shift, what don't you want to see taken? You don't want to see 1 hour buy side taken. You see how that didn't take out any 1 hour buy side? Look, it took out the low, it came up. There was no 1 hour buy side until up here. So that you want to see that liquidity left intact, and then that's where you're going to go in and you're going to look for your 15 minute shift. And then look, see like right here, discount, ramp up, right? So that's how you're going to approach it. That's what you're going to do. That right there, folks, is an edge on a platter that I just gave you right there. That is an edge on a platter. 4 hour candle, use that, fails to displace, go in, hunt for your 15 minute shift. You don't want to see any 1 hour buy side taken. And that's what you're going to do. And of course, like, you know, what I just told you right there with the 4 hour, you can do that same thing with futures. But I'm going to give you kind of a few different ways to approach this. So what I'm going to talk about first here with futures, I'm going to talk about this right here. Look, so I'm indicating that that's going to come down into a discount. You see that right there? That was from Friday at the time that I'm making this video. Because y'all know I've been getting like a lot deeper into futures lately. And next year, another reminder, next year, I'm only going to be focused. This is important if you're interested in getting into the mentorship. I'm only going to be focused on New York session next year, not London. Okay. And the reason for that is, like, I'm digging a bit deeper. I'm still doing Forex. I'm going to be doing Forex in the morning session. There's still plenty of opportunities in the morning session with Forex in New York. All right. But I'm going to be doing futures. Right. So I'm going to be, because futures, another really good time for futures is like, you know, around 2 to 4. Like, it's not like Forex. Like Forex, it starts to like really dry up later in New York session. With futures, you know, you'll get some really nice setups later in the day. So I want to be able to capitalize on that if I need to. So that's the reason why I'm going to be strictly focused on that on New York session. Okay. So I'm going to be doing Forex. I'm going to be doing futures strictly throughout New York session next year. Okay. So once more, if you want to be a part of that, there's going to be a link in the description, but also I'll link it in the comment below. So let's go over what I was talking about there, because you see, I want to see it come down to a discount. Why discount? Right? Let's unpack that. You see the signature here? See that 1 hour candle right there? So when it comes to this, you don't just go in and look for any old candle, any old random candle to fail to displace. Like, context matters. So ES. This is the same process that I was just talking about there, but you're utilizing a lower time frame. This example, the 1 hour candle. This came up and it took out this. What's this? That right there is Asian session highs, buy side liquidity. Okay, so it's Asian session highs, buy side liquidity right there. It also is a higher time frame level, so it's a big level of liquidity. And this candle opens at 8 and it closes at 9. What does that do? It respects that level. You see how we have that taken? And then it comes up, it takes out that high. And you see how that fails to displace right there into 9 o'clock? That's showing that indecision. That's showing that it does not want to move higher. I don't got to predict it. It told me that. I have a key level, and then I have it failing to displace through a key level. So like I just taught you with the previous examples, the very next draw, would be down here into the discount. Now, here's the thing about this, which you see me, or if you're in the mentorship, you've seen me do this, like with futures and with Forex too. Like, that's the very next draw, but it doesn't mean that it can't exceed that. It doesn't mean that it can't reach farther, of course. So you see that. And you also go to the 15-minute look. That's the level right there. Look. See that right there? Those trailing stops in the 15-minute. This thing was coming up. It was making new highs in here. So what it does is it creates this bait, this trailing stops down here. Here's 9 o'clock. Look at my cursor. Follow my cursor very closely. At that point, this is closed. That candle is closed, and I have that information. And we're about to come into the bell here. Then go to your 5-minute. Remember the same signature that I was just talking about a second ago? You want to look for that, but on a 5-minute. Fair value gap. Look, fair value gap. And you got the strong close beneath that low. You see that? That confirms the 5-minute shift for me. And what happens now, 30 ramps up into like the short-term premium. So you're able to get in right there, and then you're able to take it down into that discount. See what I mean? You had like that imbalance down there too. I mean, you had like these, what you saw me have in my chart, I had like these levels because these are levels of support. I had the pivot in there. See like that? I had like that pivot on there being the closing price. Those are support. The previous low in there, which is what it found support off of on Friday in the discount. But you see like how you had that scenario in there. You had that low intact. You see how that thing came up right there? It hadn't taken out that low yet. Same process. You can do that same thing here. You could be a little bit more aggressive in this case because even once it did that, the thing about it is you notice how like that's why you see me in the chat, do that, because like that's in the discount area. And that's what I mean, like just because like that's like the low of that candle is like the very next low hanging adjusted target that you can shoot for. But in this scenario, I figured it was going to exceed it because it had the discount, had the pivots down there that it was reaching for. So that's why I have that right there. You see what I mean? And that's what it does. It comes down to the pivots that I had noted on there, found support, and then it ramps up off the pivots. All right, I'm going to go over probably one more example here with a little bit of a different variation. But you notice how that's the same signature that I talked on the 15 minutes, just a lower time frame. You're just using the 5-minute instead of the 15-minute shift. You see what I mean? You're using the same exact signature. You take it into the low, play the shift. You still need a key level. Don't just take any random candle doing that. That's not a good way to approach it. You want to have a key level liquidity to frame it off of. What I mean by that is like, with the previous you saw I had the higher time frame level. You got a nice level right here too. Asian session on the buy side. So it has the key level, but it also has the failure to displace. And then when you combine both of those, you get really good results. So you see this right here. This is from the 20th drawn to the lows. I said 15-minute failed to displace, lower time frame shift. So this is a little bit of a different example. I had like all this liquidity down here that was taken, but I figured it had lower prices to be put in. So it took out that, but it's not really respecting those levels. Price is still in that downswing on the 1 hour too, like it's still getting hammered here. Low after low being tagged. It's not showing any signs of letting up in here. It's super weak. And so because of that, I see price pushing up in here. And you notice we get that same signature. So it's coming off this sell side. And it starts to push up a little bit off that sell side. But I understand because it didn't really respect the sell side, that this is probably a fake run. And then you see what happens right here. That candle at 115 closes at 130. Okay. The low of the candle's right there. But you saw I was being a little bit more... I treated that one a little bit differently, right? I wasn't looking at the low of that candle. I was looking down here. You see this? I was saying look for it around this sell side down here. Again, once more. See? It was actually already coming through that low because I saw it a little bit late. But that low down there, it still gave you like the 1-to-1 to be able to shoot for this low down here. So 130. If you go to the 5-minute, because I said fake shift, you see how this thing came up and it looks like it's having that shift at first glance. The fair value gap, the strong close above that high right there. But when I see that 15-minute fail to displace, as I just mentioned, into 130, which is right here, look at my cursor. When I see that happen off that previous high, and it's already like it's been selling off all day. It's been getting clobbered all day on Thursday. It came down and took out this sell side, which kind of gave it like this temporary support to prop it up. But I figured that that was just going to be a means to create more liquidity down here to take that, because it wasn't respecting that sell side. The 1 hour is still weak. The 4 hour is still weak. All the higher time frames was still weak. So I see price pushing up like this. And then the second, here's the big takeaway here. The second I see that 15-minute right there into 130, take out that high and fail to displace, I'm now looking for continuation lower into this sell side down here, because it was already taking out the low. But because that was like the low of where that 5-minute fake shift was, I know there's, or not right there, my mistake, right here. It's also like really clean equal lows down there, but because that's the low where that 5-minute fake shift was, I know there's going to be a bunch of liquidity right here. So I know that's going to be, it has an incentive to drop it down there into that sell side. And 130, you got that fair to displace in the 130. You also have the signatures for the shift in there. Look, the fair value gap right up in there. And then you see like these short-term lows, I got a strong close in there. So what it does is it's flipped the switch, and we now have a 1-minute shift to the downside. And I have my target down here, the low where the 5-minute fake shift, we'll say, fake shift occurred. Equal lows down there. So even though it only cleared the low of the 15-minute candle, with these scalp scenarios, and this is how I'm going to be doing futures a lot, I'm going to do a lot of examples with this with futures next year, is that would be my target. So for example, whenever I see a 15-minute fail to displace this specific signature, because if you go into your charts and you study it, you'll see this repeat a lot. This exact signature will repeat a lot. Whenever that happens and you get that 1-minute displacement in there, you can literally just hop in it and target the low of where the 5-minute fake shift, that's what you're doing. It's basically you're tagging out 5-minute fake shifts. Wherever that 5-minute fake shift happened, because the 1 hour at the time is bearish, remember, there's no indication on the 1 hour saying that it's bullish. There's no indication on the 4 hour saying that it's bullish. So whenever we have all those higher time frames saying that this is bearish, and then the 5-minute has a fake shift where it's not respecting its previous levels, all the higher time frames are bearish, and then you see a 15-minute candle fail to displace, what you're going to do next is you're going to get short once that 1 minute flips a switch. 1-to-1, target the low. You have no problem getting a high win rate if you do this. No problem. The previous examples that I talked about, you could do either of these. You could do either of these. Either of these are valid, right? Because the low of the candle where it failed to displace is like literally like the very next, very next low hanging objective area that you can shoot for a PT. You can do it like that with Forex, with futures, or you can do it like this, and you can play like these continuations lower using the 1 minute shift to tell you, and the 15-minute candle to tell you when it's ready to have that continuation lower. And once more, if you want to learn more in depth on this, then there's going to be a link to the mentorship wait list in the comments below, in the video description. Max 100 people next year, folks. So if you do want to learn and be a part of the live streams and actually see this stuff play out real time with us, right, then I recommend you get in there. But don't put yourself on unless you're 110% serious that you want to partake. Okay, because then when you put yourself on and you're not ready, then you take up that spot for somebody else that is ready. Okay, but if you want more videos on this specifically, this type of stuff specifically, please leave a comment below so I actually know there's demand, because there's nobody, because when I make a video and there's like literally no comments or there's nothing, what that tells me is that there's no interest in this, in future content for this. Okay, so leave a comment below saying I want more videos on this, or leave a comment saying 1-to-1. Just say 1-to-1, so I know that there's actually an interest in this topic, and I'll make more videos on this topic consistently. If there's no comments, then I'm just not going to do it, because like, you know, why am I going to take my time to make videos on this for free? By the way, 100% free, if there's no interest, right? But I hope y'all enjoyed. You got immense value. You did. Make sure you leave a like on the video, and we'll catch you later.